So guys, I just got done editing this video. I just want to preface this video though before I start it. So this video is showing my investments from Robinhood, Acorns, and my 401k, showing you all of my great losses that I've incurred over the past month. In this video, I also just do talk about that now is a great time to also buy into the market because while you can buy low, you can sell high later. So I'm going to put links to my Acorn referral link and my Robinhood link below. You can get free stocks or incentives for using those. But I want to preface this. Please do not sign up for these programs and invest unless you totally have the ability to be away from that money for potentially years even, So if your job is at risk, if your life savings is at risk, if you think that you will not have the ability to buy food and pay your rent or mortgage and your car payment, please do not invest this money. But if you're lucky and have the extra money that you can just throw aside into the market, definitely do, because right now is a great time to really just get into it and potentially earn some money long term. So, if you're going to waste some money on a video game, buy some stock instead, throw it into, a aggressive portfolio that will one day go up in value. But just be careful. Just remember, this isn't financial advice. I'm not a professional financial advisor. This is just what I'm doing. Take it with a grain of salt. Consider this video entertainment purposes only. It's just my personal thoughts and opinions and what I'm doing. So guys, I'm not going to make this a long video. I just feel socially obligated to make this video because a month ago, I made a video on how much money I earned on buying Tesla calls. Tesla was going up and up and up and up, and we all know what happened with that. So I just feel socially obligated to make a video on what's going on with my investments, what's going on with my financial situation, because I think it's very important for people not to just make videos on the good. You need to make videos on the bad and what my personal opinions are and what I'm going to do, because I feel like I have a certain, knowledge and influence where I can maybe help people. So first of all, just going back to the video where I made $20,000. What did I do with that? Did I reinvest it? Did I lose it all? The answer to that is no. I took a majority of the money of the $20,000 and just put it into an app called Acorns, which basically invests into the stock market. And I have a very aggressive portfolio, so literally the most aggressive. So as of right now, that money is not gone, but it's not doing too good right now either. Also, around the same time I put the money from the Tesla earnings into Acorns, I also put a sizable chunk of my savings into Acorns as well, because I realized I've had some money in savings for years and years and years, and it's kind of just sat there, and it's actually probably gone down in value when you consider inflation. So I was just ready to just kind of put it into the market and forget about it. Little did I know, in hindsight, I probably did it at the worst possible time in the last 12 years, maybe. So in hindsight, what I should have done is, if I wanted to put money into the market, the best advice is to not do one chunk. You should utilize dollar cost averaging and put in a chunk every week or so. So if I wanted to say put in, $50,000, don't do it at once. Do it, $1,000 a week, so that way you could, put it over the whole year. And in hindsight as well, if I was doing $1,000 a week, even right now, even at the lowest point of all of this, if you're still putting money into the market on a consistent basis, you're going to get your money back. And I did throw in the money into the market, not when it was at its highest, as it was starting to go down. But let's just take a look. I'm going to quit talking and just show you what my individual investments look like. So I have 3 different investments that I use outside of my normal bank account and savings account. I use Acorns, Robinhood, and then just a 401k from my work. So let's take a look at all of that and kind of see where we're at. So I'll look at Acorns first because that's what I was talking about. So if we go into the performance details of this, it is a little crazy. So you can see the account value is $43,000, which may seem like a lot. But if we consider how much I've put in, I've probably put about $60,000 in cash into this. You can see the total loss is $17,000 or 29%. If we go back 3 months, like you can just see that all of this activity, I just started Acorns recently. Even the last month, like literally if you just go in the last month, I've lost $18,000. Like just like that, $18,000 is gone. But I want to take this opportunity to state the $18,000 is not gone because I have the money in the market. I am not selling. When people like panic buy, that means they take money like this and withdraw it and put it in their savings account. If I do that right now, it locks in my losses. A lot of people take this opportunity to change their portfolio from aggressive to conservative. And that does the same thing. It will change the money in my portfolio from less aggressive things to more conservative things, thus locking in my losses. So I don't care what the market does. I'm just going to keep it like it is, just let it do its thing. And on top of it, I upped my contribution. With Acorns, I was putting in $25 a week into it. Now I upped it to $100 a week. Just because I'm very confident that if I just keep putting $100 a week into the market, it's going to reward me eventually. I'm willing to accept it could take a few years to get back to where it was. You never know. And then Robinhood, I mostly use for buying stock, and this is where I also do the call options as well. So if we look at my call options, it's not doing the best. It's not doing that bad either, considering where the market is. So in February 14th, I bought a call option for $990, betting that Tesla's going to hit 1540 by May 15th. May 15th is like a date a lot of people were buying call options for, is because that's after Tesla Battery Investor Day. At this point, Battery Investor Day could be canceled, with all the issues. The value is $180. I paid $990. So the only thing I can do is just hope that the market starts rebounding a little bit before May. At this point, I may have to end up just taking a loss from it, but I want to minimize my loss there. The only other things I have going on in Robinhood, I have some shares of Tesla, and to point out, I have bought more shares of Tesla during this whole thing. So I was buying shares of Tesla at $400, $500, $600, $700, I believe. Then it went up to almost $1,000. We know what happened there. And then it kind of crashed. But I've kind of been taking this opportunity to buy some Tesla stock. If we go to my transaction history, you can see that February 24th, I bought 2 shares at $842, but then March 12th, I bought 3 shares at $580, and then today I actually bought 6 shares at $395. So I just kind of heavily believe that this stock is like a long-term investment. I really do think with especially their solar and Powerwall offerings that they're going to increase in value and popularity over time. With everything going on right now, I think people are going to be really into like self-sufficient. I think people are going to have a more environmental-based outlook as well, because even now people are seeing, for example, like in Italy, the water's clearing up because less pollution. I think people are going to be more cognizant of stuff like this. Not to mention Tesla, you can drive them without being near anybody. You can charge at home. I made a video about that last. And the only other stock that I have right now, which I really don't even want, I just bought this random stock. I was researching it a few months ago, and I just want to get rid of it, but I don't want to get rid of it at a loss. And right now, it is down $541. And funny story, I was about to sell this. If you haven't heard, there was an issue with Robinhood like a few weeks ago where you couldn't sell. They had issues with their app. It was down. And I was trying to sell this because for whatever reason, the stock went up and I basically made a little bit of profit. I just want to get rid of it. I'm not really interested in having like so many different stocks to worry about right now. Tesla's a big a big thing I care about, so I do want to just put some extra money into their stock. My goal is to, slowly put money in and then one day get to where, I could sell the Tesla shares and buy another Tesla if I wanted to, depending on how good they do eventually. And the last thing is my 401k. So this one is a little bit different than Acorns because I've been putting money into this for a very long time, since about like 2013, despite what it says here in the graph. But yeah, I've worked at the same company for about 8 years, and I've pretty much consistently been contributing to it there. I do a certain percentage of my pay, and then they match it. So if we go into transaction history, so like pretty much every 2 weeks, about $150 goes into it. And then also too, every year we get profit sharing around February, March time. So the company kind of figures out how much money they make, and they kind of give you a percentage of your total annual pay into profit sharing. So yeah, so same with my 401k. I'm going to consistently put money into it no matter what. Obviously now there are concerns with people not being able to work and stuff like that. So you kind of got to use your best judgment. But if you're working consistently and you have the savings and the ability to keep setting money aside into the market, now is the best time to continue to do it. Do not panic and withdraw the money. Do not try to change your allocation right now. If this market made you think that you maybe aren't in the right portfolio for your, mindset or your age, like if I was about to retire in a few years, I would be kind of worried. But at this point right now, you're kind of stuck with your losses, and I would not change right now because that's just kind of sticking a dagger in the metaphorical grave of your losses. And if we check out my performance history, you can see kind of what's going on here. So basically where we're at now, my balance is $29,000. It was about $40,000 not long ago, because the market, has gone down quite a bit. So same with Acorns. My year-to-date totals it's down 23%. And if I look at my market value and my net investment, they have basically kind of met. So what that means at this point right now in the market, the amount of money I've put into the market over the last, 7-8 years has kind of resulted in zero return right now. Like the amount of money I put into the market could have just been put in a savings account with the same return. But again, that is considering if I sell right now, which I'm not going to do. Do not lock in your losses. Also, to point out, 401k from your employer typically has a match. Mine does. So all of this money I put in was not paid by me. So I can even look at my source summary to see where the money actually came from. So all of this, I've only put in $12,000 of my money. The safe harbor match is the match from my employer, which is $10,000, and then profit sharing is $16,000. So even if the market went to hell, I've only put in $12,000. So even if you double 12,000, my return is over 100%. So that's just showing 401ks, if you have one through your employer, you need to put money into it because you're basically giving up free money every single time you get paid. You need to definitely match to what your company, you need to contribute what your company will match. So the company match and profit sharing and whatever else your employer does kind of just absorbs the pain of the market if you're checking on it, quite frequently. I kind of have this in one of the more aggressive things. So mine is in the T. Rowe Price Retirement 2060 target, which for me, I kind of don't want to retire 40 years from now. That would put me at 65. Well, I mean, I guess that's, well, no. That would put me like 70. I mean, I guess that's kind of a reasonable age, but I do probably want to retire before that. So after all of this kind of ends, I'm going to really be realistic with myself and figure out which age I do want to retire. Closer to 50 than 60, I think. So I may want to look for a target fund that's like 2050, 2045, something like that. All of my investments were, I would say they were about $100,000, and now at this point they are 30, 70, about $70,000. So which makes sense because all the apps are showing me about a 30% decrease in value. Just ending this, like, I do say it's a great time to put money in the market, but do not like take your paycheck and make yourself broke trying to just throw money in the market because you think it's a good time. Like, definitely make sure you have a little bit of emergency fund. You need the ability to live in the event that you get laid off from work, or if you're a freelancer, if whatever market you're in kind of has less demand right now. Luckily for YouTubers, I do have the ability to sit in isolation and make videos. So it keeps my mind busy at least. But yeah, just be smart, please. But definitely realize that you can take advantage of the market right now if you're smart. Do not panic buy. Do not panic sell. And just have some common sense. All right, guys, have a great day. See you later. Bye.